Want to know why the US dollar has remained so strong? Why government bond yields continue to surge around the world? Why gold has come under pressure and why parts of the equity market are starting to wobble? This next chart helps explain why. These are US 10-year real yields. Put simply, it's the inflation-adjusted return investors can earn lending money to the US government. So why do the current levels around 230 basis points matter? Because when investors can earn these kinds of inflation-adjusted returns from one of the safest assets in the world, it changes how capital is allocated. Investors become far more selective about where they put their money to work. That's why I've put the skulls on this chart. Historically, these kind of levels have generally coincided with a far tougher environment for more speculative parts of financial markets. To be sure, it doesn't mean that everything falls, but companies that are not yet profitable or whose valuations rely on earnings well into the future have generally found it harder to outperform. Now look at the red arrow on the chart. Earlier this year, real yields rolled over. Financial conditions eased and risk assets went on an absolute tear. But since then, real yields have risen by close to 60 basis points and continue to climb quickly. That's supporting the US dollar, putting upward pressure on government debt outside of the US, weighing on non-yielding assets and creating a more challenging backdrop for speculative investments. Why? Because when real yields get this high, they start to crowd out capital that would otherwise flow into riskier parts of the markets. And that's why real yields matter. Best of luck with your trading. I'll catch you next time.